so let's wait for some viewers. Get an audio check. Toast your headlamps on.
Oh my God.
Oh my God.
Spotlight.
You'd think it was like Monday, the way we're performing today. All right, so good morning, folks. This is your Friday show of What's Under the Hood. So today we have two special guests on. We have Andreas, who's in charge of the equity space. He does an outstanding job showing us where we are in the business cycle and the market economic cycle based off of what sub-industry groups and industry groups are performing. We have a very special guest, James Bruce, on here. And James, would you like go on and introduce yourself, how you got into trading and all that?
Yeah, sure. What's up, guys? Always a pleasure to be on here today. So my name is James Bruce. I'm from South Africa. You can probably hear in the accent, and I'm still pretty young, but got no hair. I'm 26 years old. I've been trading for almost 7 years now. I played professional rugby before, and I bust my knee up. I tore my ACL in my left knee, and that's how I found trading. I was studying. I've got a bachelor's degree in finance, so I was studying at the same time, and it interested me. So that's how I got into it.
So one of my really good friends is from South Africa. He goes under the name of Sapphire Trader. But I'm gonna have to introduce. Do you know him?
I know him. Yep, he actually trades with us as a team. Dean.
Nice. Yeah, he's a really good dude. I
He is
really
a good guy.
appreciate
Yep.
his hard work and dedication. So with that being said, let's start the show. So staring at my charts, right? Let me get it brought up. Oh, there it is. Okay, so from a swing trader's approach, right? We're above previous month 50%. We're above NFP Friday. We anticipate to close the month higher, right? The fact that we dug into NFP twice this month tells us to be prepared for a quarterly slowdown in the next coming months, not just a monthly pullback, right? So going to the weekly chart to measure the variance of the move for this week. Did we get overpriced based off of the economic news, earnings news, whatever geopolitical events that happen? It's been a fairly, we use the 5 EMA with the Z-score. It's been a very flat week. I know it seems like it hasn't, but remember on the weekly chart, we anticipated to get at least 2.5% in a direction from this 5 EMA, right? We have not been able to do that whatsoever, right? So we're expecting for the weekly chart, right? We're expecting some still more upside movement before we get on monthly slowdown. This is a really weird week for this to happen from a pricing standpoint. So we can anticipate week 4 of the month to be more expansive, right? Because NFP Friday and previous month 50% is higher than that. We're going to expect the expansion to happen to the upside. However, for this week, right, we have, let me turn this off. We have potentially locked in a high of the week, right? So Sunday 18 to 1900 price, and Tuesday 9:30 to 10:30. One acts as an alert, one acts as a confirmation for me to lock in the low of the high of the week, right? So we came up on Monday above Sunday 18 to 19, which was in previous Tuesday's 9:30 to 10:30. We couldn't get above Tuesday's 9:30 to 10:30. We developed this Tuesday 9:30 and 10:30. We swiped down below both of them. When we swiped down below the Sunday 18 to 19, that was giving us a look that the high of the week possibly could be in. The confirmation of that was when we started doing daily closes below that. So as of right now, Tuesday's got the high of the weekend. If we put on historical over the last 1,000 weekly or hundreds of weekly profiles, and based off of where this week's price moves along an EMA and from a standard deviation standpoint, these are the 5 highest probable weekly profiles to anticipate. right? So now we have a little, guideline to tell us we can expect this to be lower, a lower day. However, now moving to what Asia and London has done, right? These variables from this 1800 to 1930 is the range, and all the way to 230 being the variable, 230 to 330 being the range, all the way to 7 being the variable. Right now, as it speaks, right, we are setting up for a bullish day, right? With the high of the day zone being 0.9% to 1.6% from a statistical standpoint. And then these are the highest probable Monte Carlos is that based off of what price has done since 1800 that are populating. So this would be until 7. This would be 7 to 1130. This would be 1130 to 1600, right, from a structural standpoint, right? So this is telling us New York 1 long. So from 7 to 8, we go long after 8, but then collapse and take out that 7 o'clock low. This is if we go short from the 7 o'clock candle, hourly candle, and then we breach it to the long side. So this is the highest probable one overall from where the daily statistics fall, right? This is London all the way until 7 going higher. We come down and we find a net on these midnight prices, Globex, RTH gaps, and all that, right? So this is what that would look like.
Exactly.
So like this, and then at 7 to 11:30, something like this. And this is not to scale, but we're expecting the net to happen. So if you throw a ball into the net, depending on how tight that net is, the ball is going to go in and then pop out. That's what I'm referring to when I say the net, right? So I'm anticipating the net to happen somewhere within, Globex low, Globex open, midnight, or settlement. And then for us to have a more consolidated, choppy PM session, right? So something like this is looking like the daily profile. These are not to scale. That's why I've had the highest probable high day zone. If we look at our data based off of what has happened so far, these are the high of the day, low of the day zones. We can see that the high of the day, based off of what Asia and London have done so far, is more likely to happen at the 1500 hour, right? Establishing that weekly close price, right? Remember, I tell you guys from a life cycle of a trade standpoint, daily closes are the most important price because executing brokers operate off of, price as it prints, right? As everything's printing, they're operating off of that. But clearing, prime broker, collateral, and margin, they're all operating off of previous day close price, previous week close price to figure out margins and collateral and all that stuff. So with that being said, at this point, that's the highest probable trade of the day. Moving on. James, you got anything to add? Like, how does
Yeah,
your
I
workflow
do.
process? Yeah, go for it, dude.
No, I was going to say I do like how you use these statistics in your trading. I like using previous days highs and lows as well. In my pre-market plan, if we take them out, obviously the Nasdaq, the US markets have been very range bound this week, as you mentioned. It's been quite tough to get a little bit of follow through. I've been chopped around a little bit in the start of the week, starting to move a little bit better. But I do like how you use the statistics. I think it helps when you're building an edge, even for discretional traders like ourselves.
Yeah, so that's why I established this vet. This vet indicator is specifically, it's free for everybody to use. But when you
Sure.
see, like, you can customize the time, you can customize the standard deviation. So let's say you have a previous day high that you want to get in. Like, all you have to do is come in here and you have to anchor this to something wherever
Yeah.
you're currently at, or a VWAP or whatever, and then it will give you the probabilities of the standard. You can customize the standard deviation right here, and I'm not going to mess it up, but to the level that you're anticipating, and it will do a look back of the data and give you the probability. it also gives you realistic expectations of the range, right? So
Yes.
like we're looking back at the last when. So if you look, right, these things right here, these little things right here that say 1130 to 1615, 0.84. So out of the last 15 weeks, and I want the 15 weeks because I want the last quarter's worth of movement, right? When we're in an environment where volatility is contracting, I want the last 30 weeks of that range. But this is the range, average range for 1130 to 1615 on a Friday only, right? So I'm narrowing it down to specifically the day of the week and the time, and then all I have to do is make the assumption if the volatility is contracting over time, then I need to use 30 weeks. If volatility is expanding, meaning historical volatility, meaning like we're pricing a larger range, right? Then I need to use 15 weeks. So in this case, that's the last 30 weeks worth of range because volatility has been contracting. So I need more data to smooth out, but not too much data because too much data puts anomalies in and it skews your data, right? So trying to
Sure.
keep your ranges within market condition, but like that's a easy step to kind of tell you. And I delete them all at the end of the day. But if you go back and you look at this, like these distributions, averages really help you understand if you're ranging or if you're not, all that. And then obviously, like I trade with the live price component, right? Because anytime you have historical data, you have to have a live price component
Yeah.
confirming it. So I use these hourly boxes, minute 5 to minute 9, to tell me what market condition we're truly in. Are we in a trending market? Are we in a ranging market? Or are we in a reversal, right?
I
Previous
like that.
day, yeah.
It's just something you mentioned. I have watched a few of your streams as well, but about the 50% of the previous month. If you're above it, you're looking for longs, below it, looking for shorts. That's kind of what I picked up from watching previously. Correct?
Yeah, so that pricing effect is not just previous month 50%, it's NFP Friday as well, right?
Okay.
So, like, what I'm doing is I'm trying to identify what's the highest probability of a trend in which direction, right? And continuation trend, right? So, NFP Friday, so like that lets me know, like, when we're having pullbacks in the indices, right? Is it going to be a monthly pullback, a quarterly pullback, or a yearly pullback, right? So knowing where we are in relationship to NFP Friday and previous month 50%, that tells me are we still trending up? Is there a possibility of trending up, or is there a possibility of a monthly slowdown? So for example, right, starting right here, we're above previous month 50%, we're above NFP Friday, which is this yellow box. We get this monthly slowdown, right? Why do we get that monthly slowdown? Well, going to the weekly chart, right? We expand it. This is the same month, right? We expand it between 2.5 and 5%. We had that monthly slowdown. Same with here. We're above NFP Friday, previous month 50%. We had that monthly slowdown. We test previous month 50%. It was just a monthly slowdown. It wasn't a quarterly slowdown or a yearly slowdown. So when we have a daily close, this is this right here. Closing. We're having this monthly slowdown effect on week one, right? We don't have the weakness to close below on the daily chart the previous month 50%. This is NFP Friday's range. We close above it, so I anticipate that this trend is going to continuation for the rest of the month, right? It's the times where we close below previous month 50% and NFP Friday, then all I do is look for quarterly lows right there, right? Same effect here, same effect here. This one we close below NFP Friday, below previous month 50%. What do I look for? Quarterly lows right there, right? So
Perfect.
it just allows me to make sure, and this is one thing Andreas is going to talk about, is like, because like, if it's funny because like if you watch the news or you listen to CNBC and Bloomberg during these monthly slowdowns, like they start putting doubt in your mind. When we start getting these healthy quarterly slowdowns, they start putting fear in your mind with what they're publishing, right? You would think the world is ending when we had these quarterly slowdowns, everybody's talking about the market's going to crash, everybody's going to die, like war is going to break out, like, and it's like, dude, we just took out quarterly lows. Wall Street found that it's discounted pricing. They bought the shit out of it, and now we're pumping higher. Like, come on. But yeah, definitely. But I do the same thing with these 5-9 boxes, minute 5 to minute 9, and previous hours, right? It allows me to visually see, are we in a ranging market, right? Are we in a trending market? Are we approaching a high probable reversal zone, you know? But with that being said, we do need to pass it off to Andreas for you to go through. But real quick for the viewers, this is the highest probable stats, and we've already talked about the highest probable trade for the day and what it looks like using Asia and London variables. One thing I'll tell you, James, is like a lot of people are starting to get into these linear statistics, these one stat wonders. Like today, we took out previous day highs, right, in Globex session. So the statistics of us returning to those previous days highs in RTH is very high. I take it another level where I put in what variables Asia did, what variables London did, what variables New York 1 did, and then I come over here and I look for my previous day, my previous 12-hour highs, my previous day highs and lows, what the probabilities are, my RTH, and this needs to be turned off. But I incorporate that live price variable of what did Asia and London do, and then what is the probabilities of it all.
I
All
like
right,
it.
Andreas, do you want to I would like to have you on the show more. Today I have Andreas on every Friday. He goes through the equity space to let us know how we're ending the week. So good morning,
100%.
Zeusy. You're way too late, dude. I already talked about your part. Sorry. Andreas, you want to share screen?
Yes. Real quick. Okay, I got careful here. Based on market internals, basically that was still bullish, right? Something like ARKK, Bitcoin, IWM was still bullish, but I got careful here, reduced to 80% from 100% to 80%. Because network momentum turns sour, right? Remember, this is quad 1, quad 2, that's general bullish. That's quad 3, quad 4. If they have the upper hand, I get careful. Also, I saw at the GEX, basically that action, that wasn't good. That wasn't good at all. So at the high of the index, I started to buy puts. And so I got careful, but
real quick, this is one thing. Go back to that. So for the ICT traders, like I don't necessarily trade purely ICT or auction theory or anything, but like you guys do SMTs, like this GEX, seeing SMTs, which are just divergence, seeing divergence between what price is doing and what is being priced in the market from a derivative standpoint is a very powerful thing.
yeah, absolutely.
My question to you, based off of the market regiments on Wednesday, what quad did we close that day primarily in?
Wednesday was basically that was Monday, right? So I got careful here and especially here, right? So market up and quad 3 came in basically, right? And at the same time, I always combine it with the GEX basically because you see that divergence here, right? Market up a little bit, but GEX very down. So there I got careful. Right now, that's changing. If you go to that day, quad 1 and 2 is coming up again. If you go here, that's Thursday. So yesterday was very constructive, extremely constructive.
Well, talk to like, because my viewers they don't understand the quads yet. Like, kind of talk to the industry groups when you say quad 1. Make sure you incorporate like this.
Yeah, quad one is basically everything techie and cyclicals. Quad 2 would be technical, cyclicals, and also energy. And that is quad 1 and quad 2 is basically bullish for the overall market. Quad 3 is only energy, little dollar is in there, and quad 4 are all the defensives, gold, XLU, utilities, dollar as well, stuff like that. So more defensive stuff. And but again, picture changed basically yesterday. Quad 1 and quad 2 get more momentum, and at the same time, I have a GEX signal. Mark is only up a little bit. GEX is up a little bit more. And what I'm also seeing is basically the earnings reactions, which is extremely powerful right now. So if you see Tesla here, I got in Tesla. Let me just see here. Right after earnings, I got in, and I see other very powerful reaction as well. If you look at DAC yesterday, for example, right, that's very powerful, and WDC the same thing. So yeah, and to make it quick, I think that was just a little dip. I got a short here, and I'm going to be stopped out soon, pretty much. So I was hedged here, and I probably would get stopped out here, and I would go back to 100% exposure.
Nice. So like Wednesday, yeah, I'm beginning to I picked that up in the afternoon on Wednesday that was a possible, flush out. And I listened to a great article by Jim Croissant, right? And I know he actually is the godfather of economics with derivatives, right? And he even said, there's a lot of releveraging that needs to happen in the next couple months, right? There's a lot of money out there on the sidelines.
Yeah.
And everybody's pushing this election thing. Guess what, guys? The election is over in 7 days, 8 days, something like that. So, this contraction that you see, might be the opposite effect of what everybody was thinking price was going to do, right?
Yeah.
Because we're used to the closer we get to the election. See, for the love of God, when Trump got the candidacy, I remember the market moved 4% in one day, right? And that was just getting him getting the the Republican nominee, right? The market's actually done the complete opposite this election season, where it just sat there and ranged, volatility contracted. But as you can see, under the hood, the industry groups, the companies, the sub companies, they're still performing like business as usual. We're not seeing not anything different due to elections. So that's telling us that money's still being put to work. We should start seeing some tax harvesting happening. Have you seen anything like that where we're going out of individual companies and more into ETFs or anything like that this quarter? I don't know if you track any of that.
I didn't get the question.
So this quarter is known for, tax harvesting because of taxes, right? So you'll see, companies might
Not really. No.
Okay, got it. All right, so it's the end of the week, right? And you primarily focus this system on the weekly close price. Will you walk through what that tells you and what you're looking for?
Well, again, I got careful, but I think we're going to turn around. I'll probably be stopped out of that Russell short here, right? So I was basically I was 80% long here, and then I took a 20% Russell short. So that put me back to 80%. A lot of people say, well, Andreas is bearish. No, I'm not bearish.
You're
I'm still
hedging.
80% long. That's just a little, precaution, because GEX wasn't looking good and the quads looked a little bit different. So that's the reason why I took that precaution. But if I get stopped out here, I will have kind of, I don't know, something like 0.5% on a 20% position, that will not be much, and then I will be 100% long again. And again, I mean, if you look at the earnings reaction stuff, that was after markets. I just showed it on Twitter, right? I mean, something like Tesla popping up like that. They had a great quarter. Reaction was very positive. Same thing with DEC. Also, right, great quarter, very positive. I mean, they're making, I don't know, outdoor stuff. So
Yeah.
really quad one, Tesla as well, super quad one,
Mhm.
right? And the same thing, this is tech, also super great earnings reaction, great report. So earnings are coming in good, and if the earnings are good, you know, market is reacting very positively. That tells me we're going higher.
Yeah, because remember, and this is for the viewers, not you, economies run off of consumers and companies, right? Yes, there's a big fancy government that tries to control inflation and employment of, you know, what's happening, but at the end of the day, they're setting the conditions for consumers and companies to thrive and innovate, right? So what earnings season tells us is that the conditions are set by the government for these consumers and these companies to be successful. One of the main reasons we look at industry groups, sub-industry groups, companies, right? Most of my followers trade the NASDAQ. The main reason that we look at the GEX, the put to call ratios, the companies, the sub company, because we're trying to get a feel for, or is the condition set by the Fed Reserve for companies and consumers to still thrive? And yes, it is. We're starting to get some cracks in, you know, the amount of debt that consumers are bringing in, but job reports haven't said anything that they're not going to be able to pay that debt. They're just not going to be able to utilize as much debt because they've been using those credit cards. They've been swiping them up and down like a girl trying to get through college, you know. They just won't be able to use it as much, but the economy's still growing, the economy's still resilient, and everything's still pointing to a condition set where the consumer will, you know, thrive, and companies are definitely thriving. So you always have to
Yeah.
consider that. All right. With that being said, any questions from the crowd? I get a lot of comments in my after you come on, Andreas. People love you, man. They want more Andreas. They want to know where your Substack
Thank
is.
you,
They
thank
want to, if you have a Twitter.
Yeah,
You
but
guys,
let me just point out one thing, Mickey. I mean, your
Yeah.
NFP stuff,
Mhm.
you know, that's all you need. I mean, it's
Yeah.
you're for swing traders, right? That's all you need. I mean, that's at least as good as the quads. And we always talk about it. And you got your view, you got my view, I got my view, and then we discuss it. And most of the time, you know, we agree. And the other thing also, your NFP Friday stuff is extremely good at, you know, catching the bottom. So the quads will take 2-3 days to turn, and so your stuff is earlier and has more risk reward. So I really love that. Absolutely. So
sometimes,
I always look at your NFP Friday stuff as well. 100%.
yeah, sometimes though, like we get in these situations like we got in last month, right? Last month was very confusing because we took out quarterly lows, but then we were trapped between NFP Friday and previous month 50% for over a month, and we had to wait for the next month to show
Yeah.
its hand. And that's where your stuff was like, hey, no, we're still in
Yes,
a strong
exactly.
market. This
Yeah,
is
yeah,
just a
yeah,
slowdown, a monthly
yeah.
slowdown. But if there's no questions from the crowd, we're going to end the stream, call it a day. Hopefully everybody has a good week. Give it a couple seconds. It doesn't look like there's any questions. So with that being said, we're going to call it. Thanks a lot, Andreas, for jumping on.